Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover the secrets hidden in plain sight. A very first look at Blackstone's new credit fund. Sounds exciting, but is it really as good as they say? Well, let's dive in and find out. And before we start, if you love getting straight to the point analysis of these dense financial reports, make sure you are subscribed and join our Discord community for more in-depth discussions linked right down below. This filing is from June 30, 2025 for the Blackstone Private Multi-Asset Credit and Income Fund, also known as BMAX6. It's basically a report card for new ventures showing us how they are doing right from the start. They are telling us their aim is to give everyday investors a way into Blackstone's massive $484 billion credit world. Scroll, dear shareholders, scroll. They officially launched this fund on May 1st. They promise income with less ups and downs than typical bonds by focusing on private loans and spreading their investments. The report says they've already seen a 2.5% return since they started, which is pretty good. That's more than double what a common bond index did. They even gave out distributions, a little bit of extra cash to shareholders. Scroll, Blackstone Private Multi-Asset Class I scroll. Let's talk about performance. Right after launch, Class I shares apparently brought in a 2.5% total return by June. That's compared to less than 1% for the benchmark bonds. They also increased their payout in July. That's a good sign for investors in terms of income. Scroll, see attractive opportunities across credit markets, particularly in private credit scroll. Blackstone is confident about the private credit market. They see better deals there compared to public markets. With all the uncertainty out there, they believe this private credit approach offers a better way to get income than traditional bonds with extra yield, less connection to regular markets and less shakiness. Scroll, Private Corporate Credit 63 of the fund scroll. Their main focus is private corporate loans because they offer better returns for the risk compared to public market loans. They say their investments have better paperwork and lower loan to value ratios, meaning the borrower owes less compared to the asset's worth. They also expect more business deals happening later this year. Scroll, Asset Base and Real Estate Credit 33 of the fund scroll sub. Next up is loans tied to physical things or real estate. This adds variety and can be safer when markets are shaky. They believe the demand for money in areas like infrastructure, clean energy, data centers, and bringing factories back home is way bigger than the money available. They see a lot of good potential deals in these areas. Scroll, Structured Credit 4 of the fund scroll. This part is smaller, but they expect it to grow, giving even more spread in investments. They say structured credit deals are still paying more than regular bond deals, offering an extra 1 to 2% in return. Scroll, Liquid Credit. Now they don't have any money in easily tradable loans or bonds, but they are watching these markets closely. They might use them for quick cash needs or to grab good deals if they pop up. Scroll, Schedule of Invest and Scroll 2. Now for the juicy part, the actual investments. Let's look at their schedule of investments as of June 30, 25. They have a bunch of deals here, but let's pull out some key figures. Scroll, Galileo Parent Inc. revolving term. Loan scroll. This loan for Galileo Parent Inc. pays interest at SOFR plus 5.75%. That means it's tied to a benchmark rate plus a fixed percentage to cover risk and profit. It has a maturity date of May 2029. Scroll, Ground Penetrating Radar Systems LLC term loan scroll. Here's another one. Ground Penetrating Radar Systems LLC term loan pays SOFR plus 50%, maturing in 2032. Scroll, Jupiter Purchaser LLC term loan scroll. This Jupiter Purchaser LLC term loan is interesting because it pays SOFR plus 5.25% and includes 3% PIK income. PIK stands for payment in kind, meaning they might receive interest in the form of more loans instead of cash. Scroll, Tail First Lien Debt scroll. Looking at the total first lien debt, they have about $30.5 million invested in these types of loans. Scroll, Vertical Topco 2 Sase, a $10 million deal that pays 12% PIK, a big chunk of their unsecured debt. Scroll, Stracini Sa Scroll 2. Scroll tells Unsure DP Scroll their unsecured debt adds up to about $17.7 million. Scroll, Galaxy 35 Clo Limited Scroll. They're also into structured finance with about 1.28 million in debt instruments from Galaxy 35 CLO Limited and almost 3.6 million in equity instruments from the same company. Scroll, Shubemba Holdings LLC. In the equity and other section, they've put almost 10 million into PIB Member Holdings LLC. Scroll Blackstone Private Credit Fund Class I Scroll, but the biggest chunk of their money, nearly $55 million, is in another Blackstone fund, Blackstone Private Credit Fund Class I. That's a significant investment in their own products. Scroll Blackstone Private Real Estate Credit and Income Fund Scroll. They've also invested about $45 million in the Blackstone Private Real Estate Credit and Income Fund, a related real estate credit and income fund. A related real estate focused fund. Scroll TELP Portfolio Investment Scroll. Overall, their total portfolio investment scroll by $9 million. Scroll Statement of Assets and Liability Roll. Let's switch gears and look at the overall financial health on their statement of assets and liabilities. As of June 2025, they have total assets of over $213 million. Scroll Theo liabilities are about $46.4 million, which includes about $7.8 million in outstanding debt from that credit facility. In-Scroll net assets of nearly $116.73 million in outstanding debt from that credit facility unscrolled NED. Scroll Class I shares, the net asset value per share is $15.17 with over 10.7 million shares outstanding. That's where a big chunk of their net assets come from. Scroll Statement of Operations Scroll. Now let's peek at how they made money and where it went on their statement of operations. Since they launched in May, they brought in about $2 million in investment income, primarily from interest and dividends. Scroll its expenses scroll. However, their total expenses were a lot higher at over $4.7 million. This seems pretty steep, but we need to see what's included. Scroll expenses recouped, reimbursed by Advice Scroll. Here's the key part. Blackstone's advisor is covering over $4.3 million of those expenses. And they are also waiving or reimbursing another $253,000. This is a massive subsidy in the early days. Scroll net investment income scroll, even with the high initial costs. After all those waivers and reimbursements, the fund actually reported a net investment income of about $1.9 million. This is great for their first couple of months, but it's entirely thanks to the advisor covering most of the costs. Scroll consolidated statement of changes in net assets scroll. Looking at how their net assets changed, they started with just $100,000 at the beginning of the period and ended with over $67 million. That's a huge increase. Driven mostly by selling shares to investors. Scroll proceeds from shares sold. Scroll, they raised over $160 million just from selling shares in the Class I shares alone, plus more from other classes like Class S and Class I advisory shares. Scroll consolidated statement of cash flow scroll. On the cash flow front, operating activities used about 140 new fund. That's buying up investments. This outflow was mainly from buying new investments. Scroll proceeds from shares sold. Scroll, but again, financing activities brought in over $167 million from selling shares. So overall, their cash position increased significantly. Scroll consolidated financial highlights per share. Let's check out the financial highlights per share for Class I shares. Scroll at income loss from investment operations scroll. Their income from operations was about 34 cents per share. Scroll to distributions to shareholder, and they paid out 17 cents per share in distributions. Scroll it investment return, net asset value scroll. The total investment return as of June 30 was a positive 2.3%. That's a solid start. Scroll expenses after reimbursement from advisor and fees waived and reimbursed scroll. But look at the expenses after all the help from the advisor and waivers. They are still at a very low EVLOP, 0.2%. That shows how much support this fund is getting from Blackstone to get off the ground. Scroll net investment income is about 10.9%. That looks really good, but remember that's heavily subsidized by the advisor covering actual operational costs. So what's my take on this report? Blackstone's new credit fund, BMASIX, had a strong launch in terms of asset growth and initial performance. They've managed to attract a lot of investor money right away, and their investment strategy seems sound, focusing on private credit, where they see good opportunities. Their advisor, Blackstone, is clearly investing heavily in its success by waiving significant fees in the early stages. This makes the reported net investment income look very healthy, but it's crucial to remember that this level of support might not last forever. Scroll for fair value as of June 2025 scroll. The big question is how these investments will perform once that advisor support starts to fade. The schedule of investments shows a lot of money in other Blackstone funds, which is a smart move for diversification, but also means some of their returns are dependent on how those other funds do. The fact that almost all their level 3 investments, those valued with unobservable inputs, add up to the total portfolio value of $64.9 million means there's a fair bit of estimation involved in their valuation, which is common in private credit. But worth noting, the fund's direction is clear. They want to be a go-to place for diversified credit income. And Blackstone's commitment is strong given the capital they've backed it with. And the ongoing support, the main risk is that the private credit market could face challenges which would impact these loans and the overall fund performance. The fund is still very new, so it's early days, but the initial steps seem promising thanks to that heavy backing. Alright, that's our breakdown of Blackstone's new credit fund filing. What do you think about their strategy and that massive advisor support? Will this fund deliver long-term results? Or is it too early to say? Let me know all your thoughts in the comments below. If you found this deep dive helpful, give this video a thumbs up and subscribe for more content like this, and definitely join our Discord community linked in the description to keep the conversation going. Thanks for watching. See you next time.